Welcome to the fascinating universe of trading, an indispensable component of the global financial markets. Trading covers a comprehensive network of financial activities vital for the seamless operation of modern-day economies. It's a domain that involves a plethora of participants, from colossal institutions such as multinational banks to solitary individuals who engage in trading from their cozy home offices. A trading transaction ignites whenever you buy or sell financial instruments, which are essentially legally binding agreements that provide ownership claims to an underlying asset. These assets are diverse and span a multitude of classes. Predominantly, they comprise stocks, which are fractional ownership stakes in a business enterprise, and bonds, which are, in essence, IOUs issued by institutions or governments. Furthermore, they can encompass commodities like crude oil or precious metals like gold, currencies like the US dollar or the euro. Trading is a strategic activity that focuses on generating profits from the fluctuation of prices in the marketplace. Traders constantly monitor these fluctuations and aim to these instruments when the prices are relatively low and offload them when their value spikes. While the concept appears straightforward, its practical implementation demands a deep comprehension of market dynamics, economic indicators, and prevailing financial trends. Beyond its role as a profit-seeking endeavor, trading is a collective pursuit that forms the foundation of our economic infrastructure. It unfolds in designated exchanges like the globally recognized Wall Street in New York, or in electronic marketplaces accessible to traders worldwide. Be it your neighborhood brokerage or a cutting-edge online trading platform, these channels provide the essential framework for financial transactions to materialize. Different types of trading strategies include day trading, where traders buy and sell a financial instrument within a single trading day, hoping to profit from price changes throughout the day. Swing trading, where traders aim to capture gains in a stock within an overnight hold to several weeks. And position trading, where traders hold an investment over a more extended period, sometimes weeks or months, long-term price movements. Of course, trading plays a significant part in shaping our economic landscape. It determines the valuation of companies, impacts foreign exchange rates, and can even trigger changes in government fiscal policies. The complex web of buy and sell orders in trading echoes the collective sentiment of all market participants. It provides critical insights into the health of an economy and can hint at upcoming economic trends. In summary, trading is an intricate activity that serves a larger purpose beyond just the buying and selling of assets. It's a key driver of capital allocation, channeling funds to areas where they can yield the highest returns. It fosters investment, thus encouraging businesses to expand, innovate, and evolve. It also offers a mechanism to investors to manage and mitigate risks via portfolio diversification. Through trading, investors and businesses can stay afloat and economies can thrive. Now, if you were to question, why should one trade? Let's take a deeper look into the myriad benefits of trading. One of the most compelling reasons is undeniably the potential for substantial monetary gain. By employing the correct strategies and maintaining a vigilant eye on the ever-evolving market trends, traders can seize the opportunity to capitalize on market fluctuations. What's more, the high returns in trading are not always synonymous with high investments. Trading allows you to start small with minimal capital and gradually grow your investment. This potential for profit, coupled with the opportunity to start with small capital, is one of the primary incentives that attract individuals to the world of trading. The second major advantage is liquidity. In terms of finance, liquidity refers to the ease with which an asset can be transformed into cash. This benefit is especially crucial in volatile markets where the value of assets can fluctuate wildly within short spans. Trading affords this convenience, offering the flexibility to quickly convert assets into cash whenever needed. An additional significant benefit is diversification. Trading isn't limited to just one type of financial instrument. On the contrary, it opens a broad arena where one can invest in a multitude of financial instruments, including but not limited to stocks, currencies, commodities, and even bonds. By spreading across different asset classes, you can create a balanced portfolio that mitigates risk and potentially increases your overall return. Diversification can act as a safety net, providing some level of protection against drastic losses. Further, trading can afford personal control over one's investments. Unlike traditional investment avenues where decisions are often made by fund managers, in trading, you have the reins. You decide what to buy, and when to sell. This sense of autonomy can be particularly appealing many. One of the key advantages of trading is the flexibility of trading hours. With the advent of the internet and advancements in technology, trading is no longer restricted to a particular geographical location or time zone. It offers the potential for round-the-clock trading, which is a significant advantage, especially for those in different time zones and for those who prefer to trade at non-traditional hours. Lastly, trading can be done from virtually anywhere and at any time, thanks to technological advancements. This convenience and flexibility are greatly valued by many traders. The fact that you could be at the beach, in your living room, or even in transit and still be able to trade opens up a world of convenience for many. While these are some of the key benefits of trading, it's crucial to remember that like every financial activity, it also comes with its own set of disadvantages. While the allure of potential profits can be enticing, it's crucial to also understand the pitfalls of trading. The most glaring downside is the considerable financial risk involved. Even seasoned traders can suffer significant losses due to the volatile nature of markets. And despite meticulous analysis and strategic foresight, the possibility of financial loss can never be entirely eliminated. Another downside, often overlooked, is the enormous commitment of time. Trading is far from a passive activity. It necessitates constant vigilance. Traders must diligently monitor market trends, absorb a barrage of economic news, and conduct comprehensive research. But the complications don't stop there. The financial landscape is ever-changing and traders must continually learn and adapt. As market trends oscillate and regulations shift, traders find themselves in a constant state of evolution. They have to master new trading techniques, grasp regulatory changes, and stay abreast of continuous market dynamics. A significant aspect to consider is the tremendous level of effort required. Trading is not merely a financial commitment, it requires a substantial investment of time and energy. The process demands continuous learning, rigorous monitoring, and constant adapting. But perhaps the most understated disadvantage comes in the form of stress. The constant pressure to stay ahead of the market trends, the fear of and the toll it takes on personal life can lead to significant stress. This stress, if not managed, can lead to serious health implications impacting both mental and physical well-being. Another risk lies in the potential for addiction. The thrill of making a successful trade, the adrenaline rush when markets fluctuate, can become addictive. Traders may find themselves obsessively checking markets and making impulsive trades, which can lead to substantial financial and personal damage. Overtrading, too, presents a significant risk. Traders, especially novices, might get carried away and begin to trade excessively. This can lead to hasty decision-making, inadequate risk management, and eventually financial loss. The stakes in trading are high, and the path is fraught with challenges. Particularly for those new to the world of trading, it's crucial to understand the monumental commitment required. Trading isn't a path suited for everyone. It's a journey for those who can navigate uncertainty, dedicate copious amounts of time, continuously learn, and are prepared to potentially face financial loss. It's essential to fully comprehend these challenges, from the financial risks to the personal impact, before deciding to embark on this journey. Thus, while trading can offer lucrative opportunities, it's not without significant challenges. Understanding these drawbacks, from financial risk to potential addiction, is crucial before stepping into the world of trading. Now let's delve deeper into the specific risks associated with trading. Trading is not without its risks. It's essential to be aware and prepared. Market volatility is one such risk. Prices can fluctuate rapidly in very short time periods, potentially causing significant losses. Leverage, while it can amplify profits, can also magnify losses. It's like a double-edged sword, beneficial when the market moves in your favor, but disastrous when it doesn't. Psychological factors also play a crucial role. Emotionally driven decisions can deviate from rational judgment, causing traders to make impulsive choices. Fear and greed are often the culprits behind devastating trading mistakes. But don't be disheartened. Risk management strategies can help mitigate these risks. Setting stop-loss orders is one effective tactic. It automatically closes your position once the price reaches a predetermined level, thus limiting your potential loss. Having a well-defined trading strategy is another. It helps you make informed decisions based on analysis, not emotions, and provides a roadmap to navigate the tumultuous seas of trading. Remember, risk management is key to surviving and thriving in the trading world. In conclusion, trading is a complex yet rewarding venture if done right. It's a dynamic arena where financial instruments change hands, offering opportunities for profit, liquidity, and diversification. Yet, it's not without its pitfalls. The risk of financial loss, the time commitment required, and the need for continuous learning are all part of the package. Trading also comes with its fair share of risks, from market volatility to the potential misuse of leverage and the psychological toll it can take. That's why it's important to have a well-defined trading strategy and use tools like stop-loss orders for risk management. Before stepping into the world of trading, it's crucial to arm yourself with knowledge. Understand the ins and outs of the market, study different trading strategies, and consider seeking professional advice. Remember, informed decisions are the best decisions in the trading world. Thank you for joining us today. If you found this video helpful, please subscribe, like, and share. Stay tuned for more insightful videos on trading and finance.